Good morning all and welcome to today's video. So today I have two pairs on watch and those are pound CAD and pound dollar. And my favorite of the bunch is pound CAD, so I'm going to break that one down for you now and then move on to pound dollar. So I am looking at pound CAD on the higher time frames because, as I've said in my previous videos, if you were actually watching those, if you're new to my videos, welcome. It's a pleasure to have you. On the higher time frames on pound CAD, we have this all-time low here, okay? And price came close to this area multiple times. On this occasion, it went all the way up here, tapped into this area here, came all the way down, near missed to this all-time low again. And each time it keeps scooping back round, and eventually what happens when we near miss a significant area of value, or any area of value for that matter, is we tap into it. And on the higher time frames, we typically break below it if we're going to rally to the upside, take out all the liquidity that was there, catch people the wrong side of the market who typically start shorting when we break below such areas, believing what was previously support becomes resistance once it's broken below. And in the majority of cases, all that typically happens is the bigger players, the banks, the funds, etc., buy up these areas because from a business perspective, they see this kind of value as a bargain area of value for a buy. Okay, so I've talked previously about if you're looking to buy a house on a particular street, if the house in that area dips below what it has historically been, then that represents a bargain area of value for a buy, and that is typically where the bigger players step in. And you can see that happened here. We have this impulse once we broke below, impulse, correction, continuation, impulse, correction, continuation, which is the natural ebb and flow of the market. So at this moment in time, there is no need for price to come all the way back down here because it has already washed out the liquidity that was sat down here. And one of the things that makes me think that we're moving to the upside is not only have we had the impulse, correction, continuations, but we also have near misses to the upside. Okay, so this high here, near miss to here, which was the start of all of this volume as well. Okay, so price is more likely to gravitate towards an area of value, an area that it near missed to, if that area also happens to be the start of a big piece of volume such as that. Okay, and you can see the same thing here. We have this volume here. Okay, and this high here, which this high near missed to, was also the start of this piece of volume, and you can see that we sold off aggressively from that area last time around. Okay, and as we zoom in as well, we also have a series of near misses as well. We have a near miss to here, and this high near miss to here as well. Okay, and this high, there was enough volume here for price to break out of all of this volume, okay, suggesting that there's a lot of liquidity here as well. So there's plenty of reasons why price would likely move to the upside, okay? And you can see this footprint here, price near missed, it came down, tapped into this footprint here, which may be where price responds for a move to the upside to potentially take out these near misses. I've got my arrow pointed to there, but of course we could be moving all the way up to here. But just as a solid first target, I think this would be a good place where a lot of people would be taking profit, okay? If we were moving to the upside, you can see we've moved down in a very non-progressive way. Initially, I did admittedly have my area of value there. I had my ray line there, but this was a prime example. If you remember my previous videos, if you were watching those, remember I said to you that I had my ray line plotted here, and I said to you that I was looking for an impulse up followed by a correction there as confirmation that price wasn't going to do what it subsequently did, okay? Because this is typically the banks and the bigger players stacking their orders for the next move to the upside, okay? And I said by waiting for this correction, I was mitigating the risk that this could do something like this, okay? Tap above and then push down, which is pretty much what it did, okay? So when we broke above, because there was if I just show you this on the 15-minute chart, because there was a sharp hook point here, Okay, I was waiting for a correct. There could potentially have been a lot of liquidity here, which price tapped into and then moved to the downside, and that's what it did. So we didn't get that flag that I was looking for. So the flag was actually me mitigating the risk of price doing what it subsequently did. Okay, so as I said, trading is not about being right, but if you know what you're looking for, you can mitigate the risks so that even if what you're looking for doesn't kind of play out, then you know what you're looking for to avoid price doing what it subsequently did, and you know what you're looking for to confirm that price is actually going to do what you forecasted that it would do, if that makes sense. So that's how you can, not necessarily be right if you want to use that terminology, and still capitalize on moves or and stay out of the moves that you don't want to be get involved in. So I'm not surprised that we moved down here, because we moved down to this area, because if you look at this, there was volume here. There's volume in this area, okay. And last time there was enough volume at this low, within all this volume here, to cause price to break out to the upside. This was the kind of the start of this move to the upside after all this volume was generated. So I'm not surprised that we've moved down to there. But what I'll be doing now, once again, just as with what I was looking for previously, what I'll be looking for is the following. Okay, if we just get rid of that, I will be looking for, once again, because we've moved down with a little bit of momentum, and because we've been moving down for some time, what I'll be looking for is a break above this. Well, it would be above this high now as well. When I did my forecast, this high wasn't here, but I'll be looking for a break above. Okay, because then we would have negated the possibility that this is a bear flag, some kind of bear flag to push lower. Okay, and if we got the correction above this high here, excuse me, so if we pushed up, we got the impulse followed by correction, we would be trading above here, negating the possibility that this is a bear flag to push lower. We would also be trading above here, and then if we look on the 4 hour, okay, I'm pretty sure the 4 hour would look very, very solid by that point. The daily would probably be looking pretty good as well. So we would have retraced a significant proportion of this bearish daily close there, and then we would have. I would anticipate the bigger players stepping in then for that move to the upside. So what I'll be looking for is quite simply just a break above this high here, an impulsive move followed by correction, and then I'll be looking to get long at the break of the flag within it, and then I will be able to manage it up to this high as a first inflection point for something in the region of 5.5%. And that is what I'm going to be looking for pound CAD. And of course, then if we break above there, then we're likely taking out these near misses and those higher time frame near misses that I showed you for a move to the upside. So that is pound CAD. So I'm going to leave that on the chart. I'm going to reset an alert on the fly. Obviously, during the night, my alert was triggered. So let's set another alert. Set another alert there. If that alert does not trigger, then that means we haven't broken above here, or we're not even getting close to breaking above it. So there's no need for me to look at the trade. Okay, no need for me to try and FOMO into a position. If the alert doesn't trigger, leave it alone. So this one is, I don't like this quite as much, which is partly why it's lower down. The price action, particularly this bit here, is a little bit more unconventional. But if the DXY, the dollar index, is moving to the downside, then you best believe that pound dollar is most likely moving to the upside. Okay, so on this one, we kind of have this 1, 2, 3 touch structure here, with a 1, 2, 3 middle section, giving me a clue that this is a completed piece of structure. We break below the low, catch people the wrong side of the market once again, who start selling this once we break below. As I've said previously, if they're selling it, where are they selling it to? Most likely a lot of these people don't have a target, and if they do, it's probably a lower time frame target, which therefore by definition means that they're too zoomed in. Look, where are they? Where, if I was selling here, where am I selling to? There's nothing. Okay, so this likely represents just a bargain area of value for a buy once again, especially as we have a near miss here to this high here, which, if you look what happened here, price scooped up to form a double top, and there was enough liquidity here to cause price to break out of all of this volume. Okay, so that was the causation of this move here. So price will likely find its way back up to that area. So at this moment in time, there is no need for price to come all the way back down here because it's already washed out the liquidity. And just as with pound CAD, we have this impulse correction continuation. Price leaves a footprint. Okay, so we break out of all of this volume. Price leaves a footprint here. That would have been an area that the bigger players would have been looking at. It comes back down, taps into that area. People start selling once again. They get themselves caught the wrong side of the market. Price pushes up. So there's no need at this moment in time. If we even just zoom out to the monthly, you can see that we've well and truly broke below here and that we've rallied to the upside, and price is just stalling on the monthly chart, potentially for a move to here. And if we were to take out that high, we would likely take out this near miss and this high that we near miss too. So that means that I can be looking on the lower time frames for entries. So if we just drill down, you can start to see on the 4-hour chart, there's a little bit of a footprint there, okay? And this footprint here that was left, noticed that we came down, we near missed to this footprint, pushed up. Price tried to move to the upside, but there was still liquidity likely in this area that was dragging price back down, which needed to be filled before a move to the upside could occur. And what gives me the inclination that there's a lot of volume here is because if you look what happened, this footprint last time, there was enough volume there to cause price to smash through all of this volume. And not only that, it also happens to be the retest. This low here happens to be the retest of all of this volume here. Okay, giving me a clue that there is likely still a lot of volume here. And if we were to tap into that area, given how much volume was built up here and how when we exchanged liquidity here last time around, we broke out of all of this volume, that gives me a clue that there's likely a lot of orders here. And if we tapped into that area, we would likely rally aggressively to the upside. I won't be looking, just to touch on it, for a risk entry from the bottom of structure, just because of the sequence. How, if you look at how this is not a typical sequence, we've had this kind of price has been moving in that kind of swinging nature. So, we could quite easily get the same thing again. Okay, and just to touch on it as well, if we look at the proportions of this is not that typical. Okay, so we've kind of pulled back. If we were to tap into the area, we would have pulled back about 70% of the move, which is slightly uncommon. And when that happens, you're more likely to be tagged in, tagged out. Price comes back down to here, perhaps forms some kind of M-style pattern, what we call an M-style pattern, and then moves to the upside, especially given how pound dollar has been moving all in all. Okay, so this is partly why this is lower down on the list as well. So what I'll be looking for in this instance is the following. I will be looking for, if we were to tap into this area of value, I will be looking for not just a push up and a flat. I won't be looking for a kind of flag just here, because then you'd be trading into these lows here. Okay, and this could just be a retest for a move back down to here to give us the M-style pattern. Okay, where we kind of have this M-style because of how pound dollar has been moving and because of how far this correction has pulled back relative to this impulse up which has preceded it. So what I'll therefore be looking for is price to tap into this area and to then push back up above this high and above this high, which would also be above that high as well. And then we would have retested all of this. We would be trading above all of these highs. And then I think the floodgates really would open for a move to the upside if that was to occur. So I've therefore got my alert set just above this area of value to see if we can tap into it. You can see price seems to be trying to find its way down to that area. If that alert does not trigger, then I will not be looking to place a trade on this pair today. So that is it, folks. I have a webinar to attend in about 25 minutes time. I hope you've enjoyed this video. So slightly shorter video than normal, but hopefully this has provided you with some value and perhaps change your perspective and on how you look at the market, and given you an inkling that trading doesn't have to be complicated. Okay, You don't need a bunch of indicators and mess on your chart. If you understand price action and you understand volume and where the bigger players are getting involved, and you know how to, with a high degree of accuracy, ride the coattails of the bigger players, then you don't need all this clutter on your chart. But thanks for watching, folks. I will bid you a great day, and I will be back tomorrow on Friday with another one of these videos. Have a great day, and I'll speak to you again soon.